Yo, what's up you guys? Welcome back to a new video. Today we are going to speak about the NFP data that got released, the unemployment data. I'm also going to do the usual weekly market breakdown to look for the best probability setups going into the new week. If you're new here, welcome. Please head over to the educational section where you'll be able to learn more about the fundamental analysis. Also, don't forget about the competition that is currently running, where I'll be giving not one but two live funded accounts. Yes, it will be. I will pay for the funded accounts. I will trade them myself for you, and once they are passed, you will get the accounts. And then on top of that, you'll get 1 month access to my signal group as well. And trust me, anybody who's in that group should be able to tell you how well we are currently doing as well. Now let's jump straight into the information. Well, all I can say is wow 517,000 jobs were added. That is almost 2 times higher than the Dow Jones estimate of 193,000. Unemployment came down as well, and all I can say is whatever Powell is doing, please, we need you to come and do it here as well. Why do I say so? The labor market is strong. Listen to this. They've hiked interest rates. Inflation was high, but even through everything that is currently happening in the economy with the US, their GDP came through positive, and we're probably going to see it come through positive once again with numbers like this. My question is, why can't we do it here in South Africa as well? We've got high unemployment rates here. We've got high. They most recently announced that the repo rate also went up, and it's gonna continue to go up. We need Powell. Powell is like Messi. Like everybody needs, we need someone like Powell who's able to maneuver the economy through everything that it is that we are going through and still be able to deliver such beautiful numbers. And finally, my friends, I can say it, that the correction on the dollar index, as anticipated many weeks ago, is finally confirmed to the 0.382 from the Fibonacci, taken from the high to the low of the monthly impulse. Now let's jump straight into the data. Firstly, the average hourly earnings was forecasted at 0.3. That came through as anticipated. 517,000 jobs. Unemployment came down. What a beautiful jobs report for the dollar index. And obviously because of that, we saw the dollar surge one massive candle. Like this candle, it was so much I want to know, especially the guys who traded gold, if you bought gold, but please, even your stop loss would have been it would have run straight through your stop loss there as well. Any case, now that we know we've got a positive jobs report, we can now expect the dollar index to correct itself after this massive bearish run. Now, when I say correct itself, I'm talking about a massive impulse. So after an impulse, you expect a correction. Now, we can definitely expect the market to correct itself with this healthy job report. But we're going to get into that information right away. We just need to get through this very quickly. It says here the unemployment picture started off 2023 on a stunningly strong note. It's almost like when you got your results, but not all of us can speak about the results, depending if you're still on school there as well. Now, it says here the growth across a multitude of sectors helped propel the massive beat against the estimates. Okay, 128,000 came from leisure and hospitality, which was where most of it came from, and then professional and business services added 82,000. The government added 74,000, and then healthcare added 58,000, which kind of gives us a indication of where most of the jobs came from. And we could see it was in the hospitality sector where a lot of people would want to go to, especially with the COVID that died down now. But as a result of this, we know what happens due to the correlation between the dollar index and the Nasdaq, between the precious metal, and obviously every currency pair that trades on the spot trades against the dollar index. So when you are looking at trading the dollar index, if we're looking at the index now, we're basically anticipating that if we say the dollar index is going to increase in value, we are saying that every currency trading against the dollar is going to decrease in value there as well. But without any further ado, let's jump straight into the technical analysis there as well. Now, thank you. Now, here on the monthly time frame, clearly, I've said this many times before, the market had found very strong level of support there as well. Now, as I've said before, the market had printed this massive impulse. So after an impulse, you expect a correction. Now, a correction is normally expected to the 0.382, which is the first Fibonacci level. If you take your Fibonacci from the high to the low of the impulse, and we're going to mark that level there as well. Now, remember, some brokers does allow you to trade the dollar index as a standalone, but you can use this as an indicator for trading the dollar index against most major currencies there as well. On the weekly time frame, what do we have now? Yeah, from a weekly perspective, again, we have the market printing an equal low. If you go into lower time frames, you realize this was just a liquidity grab to the downside there as well. So again, we're looking for further price action development on a daily time frame to give us that further confirmation that we can now start looking to get into the market. Now, what I see over here is we can see over here how the market had printed this level of support. The market then broke below support, came back, tested as resistance, broken above resistance. All of that resistance is now one turns again support. Now, I do expect the dollar to correct itself first and then start that move to the upside. In doing so, will the market also print an inverted head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Now, if you enjoy the content and you enjoy listening to me talking about patterns, please do consider hitting that subscribe pattern button there for more updates. Next up, we have the Nasdaq. Now, the Nasdaq sitting at the perfect point, just completed this W formation. Now we expect a pullback to the neckline before we could potentially see a further continuation to the upside. We're going to just make that there as well. On the weekly time frame, we can see how the market printed a strong resistance. This was acting as a level of support, came back, tested it as resistance, broken above resistance. All of that resistance is now turned support. So we haven't expect the market to pull back before a further continuation to the upside. Failing to do so will give us way for the market to break below that support once again and for the market to continue lower. Thank you. Now, here on the daily time frame, what do we see? Now, from a daily perspective, the market had not created price action yet. However, what we see over here, if we look left, we can see the market had come to test this level of resistance. So what I would suggest you wait for is basically for the market to start creating some structure, maybe print a green candle and then a red candle and then a break of structure. Start waiting for that bearish momentum and then start looking for that a valid opportunity. So you'd basically wait for the market to print a green candle next to this red candle and then wait for a break of that support, would then be turned resistance, and then you can start looking to get into the market on there as well. Next up, we've got the Dow Jones. Now the Dow Jones has just broken below support once again. I do anticipate the market to continue slightly lower, pull back, and then continue lower. In doing so, will the market print what's known as a head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we've got Euro USD. Euro USD is showing similar price action. We have a market that printed this structural level over here, acted as a level of resistance. The market then broke above resistance, came back, tested as support. Support's not holding. We do expect a slight pullback before a continuation. Now, in doing so, will this market also print a head and shoulders pattern, which is considered a bearish pattern from a technical perspective? The reason why we expect the market to pull back, it's the same reason why we expect the market to print the right shoulder on the dollar index to complete the inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. And because we are looking at the Euro USD, we expect the Euro to get weaker against the USD. So we're looking for a bearish pattern, which is a head and shoulders. Next up, we've got the long awaited gold. Now, gold also just broke below a very important structure after a week of consolidating. It finally broke out. Now, if you know, like anyone else does, about the person who sold a lollipop strategy for 3,500, then you would know that a breakout structure means you wait for a pullback. Now, if you take the Fibonacci from the high to the low of this impulse, what we do have here is we've got a nice 0.50% here, but what I do see the market printed over here could potentially be an overextended information. After an overextended information, you normally expect a pullback to the left leg before a continuation to the downside. That's all from my side. Thank you for your time, and as always, cheers for ears.